Good morning and welcome to the trade setup right here on BloombergQuint Live. It's Friday yet again, and it uh, suggests that the day would be an interesting one. The reason I say this because there are a lot of cues that we have to watch out for today, uh, both from a local and a global perspective. Now, keep in mind that the coronavirus cases across the world are rising at an alarming pace. The US, I think, recorded its single highest case number yesterday. So the situation around the virus is not that improving. But what the US markets did, and therefore what the Asian screen would do would be interesting. So let's get those charts. I have a series of charts today to show you, to try and give you some perspective, let me put it that way, both around what's happening in the virus as well as what's happening with the US cases. So let's get the first chart up on the screen and effectively showing you what the US markets did. And then we'll try and show you how post the Fed activity moving sideways, what's happened to the market. So this is, of course, what the US markets did. And as you can see, precious little. That's not bad, really. But you must agree that the Nasdaq really recovered and did reasonably well compared to the rest of the markets. At a point of time, at about 10:30 p.m. our time yesterday, the Dow and the S&P were down about 1%, and the Nasdaq was up about 0.75%. Of course, the Dow and S&P also subsequently recovered. Keep in mind the slightly medium-term trend. I know there's a lot of talk about Robinhood traders and how retail is driving, and they could well be. I'm not an expert to suggest that they aren't. But there's a chart which is interesting, which shows that post the Fed having stopped the purchase of assets, the rally in the US markets has gone sideways. Now, it might be too soon, it might be just a 1 month phenomenon, and this could be well be happening because there has been such a stupendous rally that the markets would anyways move sideways. But hey, there's a correlation out there that we are trying to show via this yellow box. The blue line, of course, is the Fed balance sheet. And since that went sideways, the rallies went gone sideways too. So maybe this could actually be the reason. Never mind how much we want to love to talk about the retail traders propping up the markets. Maybe they are just traders, and the actual money to keep the markets propped up could entirely be the Fed and have nothing to do with these retail traders. Having said that, the Asian screen should come up on your screen. The SGX Nifty will come up on your screen, and you will see that move is, kind of sideways, marginally positive, if you will. The HSI is slightly lower as well, but very volatile and very choppy is the point that I'm trying to make. And I guess that's the nature of our markets in the session today as well, is what it could be in the session today as well. The SGX Nifty will come up on your screen, or the indications, and that will show you that we'll have a start which is muted, kind of sideways of sorts, but the rest of the day, what it shows is anybody's guess. Let's try and guess some of that. So if you look at the trade yesterday, viewers, the top 10 active Nifty counters by virtue of volumes and trade all ended in the green, which to my mind is a bit of a positive, really. In a day like yesterday, when the larger move was a consolidation of sorts, the top 10 stocks ended in the green, which is showing that the activity might still be biased towards the upside. But I do think that financials may come under a little bit of pressure post the PNB classification of DHFL. It's not a very large account, but there is a large thing that has happened for PNB. Some of the others might come in, and people might start worrying that what if these time bombs come in again? Now, the Bank Nifty is in a very strong move upwards. So I'm not out there predicting that you could trade the Bank Nifty on the downside, but keep this at the back of your mind. What I do think could happen is TCS-led move on the Nifty IT. It's had 1,000-point gain, the Nifty IT, since June 15th. It's almost been a one-way rally. And we had the IHS, not the IHS really, but one of the consultancies saying that Q3 and Q4 might not be all that great either, or Q2 and Q3 from our FY perspective will not be that great for IT. TCS is saying that the worst is behind, and I'll get to that in a bit. But I think this could be a bit of a problem. However, what does one therefore watch out for in the session today? One, the earnings. Two or three interesting ones. IRCTC, always interesting. The numbers will not be a great number, but it'll give an indication of what the washouts could be like. A sale could be an interesting one, though. The stocks have been in a bit of an uptrend in the last few days. And GNFC, because of all that's happening to fertilizers, could be an interesting one. The stocks to monitor in the session today, there are 2 or 3 or 4 very important ones to my mind, at least. Aside of what the brokerages have said, I'm bringing out the key newsmakers today because there's a lot to talk about. PNE, $492 million fraud unearthed, and they have provided for 12.5 billion of that. This is on account of DHFL, remember. So keep this in mind, that there is a large provision that PNB has done on account of DHFL, while they've approved 10,000 crore fundraise via private placement as well. But I think that what could rule on the market's mind could well be this. I wouldn't be surprised if the stock has a corrective move today. I could be completely wrong, viewers, remember. I won't be surprised if there's a corrective move today. To my mind, this is the stock of the day. What narrowly missed being a stock of the day is TCS, simply because of the kind of move that it has had and the kind of results and therefore it's come out with. So here's the handle, right, on the results. There was lower revenue, which weighed on margins, because margins came off 23.6% versus 25.1% quarter on quarter. That's not a great performance. The bottom line was below expectations. Never mind what else and the finery around the analysis that you do. This is the key performance from TCS. The point to note, though, is the statement from Rajesh Gopinath. He's saying that the revenue impact of the pandemic played out broadly along the lines that they had anticipated at the start of the quarter. It affected all verticals, with the exception of life sciences and healthcare, with varying levels of impact. We believe it has bottomed out, and we should now start tracing our path to growth. Now, that is a key thing. When TCS, the big boy, says that this has bottomed out and they should start tracing our path to growth, I think the market should believe that. Now, whether the market goes out and believes some of the consultancies which are saying that Q3 and Q4 might not be all that great is a separate case in point. I think the market should believe this, but because the numbers have been slightly disappointing and because there's a bit of a rally, could there be a breather? I think that's what the Macquarie note says. It's time for a breather for TCS. Let's wait and watch. It's an important one to monitor because it also impacts IT and Nifty IT to my mind. Even though these days a lot of stocks move on their own, but I think this impacts Nifty IT. Therefore, do watch out for Nifty IT and TCS both. Don't be surprised if there's a bit of a sideways to a marginally downward move. A mixed cues for BPCL, HPCL, IOC. I think the positive piece is that the fuel consumption is now at 91.5% of the pre-COVID levels, which is really interesting. Not all gas and fuel consumption has risen this way. I think ATF fuel hasn't, but CGD players of the gas or BPHP IOC, the numbers have come back very strong, and that should be heartening. But the key is they now have a competitor, Reliance Industries. Who else? Reliance Industries and BP have started the new Indian Fuels and Mobility JV. They're going to sell fuel and Castrol lubricants at existing retail outlets, and they'll expand the number of retail outlets to 1,400 from 5,500 over 5 years. Now, here I don't think there is so much of a discount or a consumer experience that you can give to people, but you never know. Because it's Reliance, it could be interesting. However, the existing ones have a deep entrenchment, and therefore it may not be as disruptive as it would be for some of the other sectors. Really, here, I don't know if there's so much of a possibility of disruption, but you never know. Do watch out for the oil marketing companies today. I think more on the upside, but this news could also have a bit of a bearing. Last but not the least, I think the interesting one is First Source. Mind you, this might only be done for averaging purposes. Please do your due diligence before you do anything. But I think the shareholding pattern, as it got revealed yesterday of First Source Solutions, suggested that Rakesh Jhunjhunwala has increased his stake in quarter one from 2.06 to 2.88%. Let's wait and watch if First Source has some reaction. That aside, just keep in mind one last thing. Tata Power, Adani Power, the Gujarat government, it's talk of town. We don't have access to the order as yet, but it's the talk of town that it came in the dying moments of trade yesterday that the Gujarat government has cancelled an agreement with these companies for high tariff, and that could weigh in on Tata Power, Adani Power in today's session. So if these stocks react, you know why they are reacting. As soon as we get hold of the exact order, we'll be putting out those news as well. But do watch out for those names as well. Thanks so much for tuning into the Trade Setup today.